What's so interesting about these current times is with the rapid change in rates, it's caused this uncertainty in a lot of markets. When you talk about rates going up 3 or 4% in 9, 10 months, that hasn't happened since the early 80s, in that 15% inflation boom in those days. So when you have that level of uncertainty, you've got the opportunity for, as an investor who's coming from a place of strength, to go hunt for deals. And so if you're selling because you have to right now and you don't know what's around the corner in terms of house values and markets and rates and stock market, etc., well, that uncertainty happens and you have to sell. And let's say you're at 400,000, and if you're a buyer, an investor coming from a place of strength and liquidity, you can come in and say, hey, for this deal to work, I got to be at 200,000. And with that amount of uncertainty and not knowing what's going to happen down the road, that could push a seller into the point where they have to negotiate. And so that seller may say no, and then it elicits the conversation of, well, how close can you get to my number? Because if you don't take it, I'm going to go somewhere else. And so that seller may come down to 310 or 320 or whatever number, and maybe you meet in the middle. And that buyer may have just gotten a huge discount on the price. And if values do go down in the next year or two or three, well, they're coming from